Hey guys, welcome to another video brought to you by Total Control Traders. Now before we get started, I just want to quickly mention that our website is now in soft launch. So please take a moment to check it out at totalcontroltraders.com. There is still a lot of work to be done on it. Right now it's temporary, as again it's a soft launch. Looking forward to have you guys on board. Also, my cat arrived earlier, so hopefully you guys can will notice a difference in sound quality. Alright, let's get right into it. First one, SPX. So no major concern yet, as of yet. Now if we're to zoom out, there we see that this volume, it is increasing bear volume. However, comparing to previous sell-offs, there is not a major concern as of yet. The slight red flag that I'm seeing is we did break through both supports today, both the previous high supports today. However, it is OPEX day today. We're expecting increased volatility. So here's what I'm looking at. A little bit different than previous sell-offs. We can see that previous sell-offs got bought up, at the GP on December 21st, again on January 5th. GP bought up. Okay, today's a little bit different. We didn't get to the GP, so we haven't seen the buy up, the buy in the dip yet. However, the reason why I say there's no major concerns is, as you guys know, throughout since I think somewhere here, end of December-ish. Yeah, it was end of December-ish. I've been playing a little bit more conservative, minding my own sizing, making sure that I'm in the capital preservation mode. However, happy to announce yesterday, accounts made new all-time highs. Actually, no, Wednesday made new all-time highs. Thursday made another high. Even in capital preservation mode, you can still make your account go up. Just play with the trend until the trend is no longer there. Make those easy money, guys. We can clearly see that the trend is still in an upward momentum, and we're gonna see where this higher low, this daily higher low, is gonna come in at. We did lose the 88 by quite a bit more than previous losses, but here is my must-hold zone. The last high before the last two, on January 4th and December 29th, the high of December 17, 18, 19. This is my must-hold zone. Okay. It was highlighted before on the chart, and it remains highlighted because it is a key zone for me. Not only is it one of the notable highs from before, it also lines up with a GP from this move from January 4th all the way to January 8th. So this is a must-hold zone for me. If we lose this zone, then that's a concern that I will be exiting most of my bull positions, even though sizings are small. But if you can preserve more capital for that next bull play, all the better, right? Now essentially, I also wanted to point out, guys, that in the case that consolidation starts, where should we be looking at? Let's run a fib from the low to the high. Does it line up with anything? GP somewhat lines up with the previous wedge, and that's why the previous wedge is still drawn here. 0.5 lines up with this high here, which you can see has served as somewhat of a support here as well. So this will be another key zone. If market was strong, I'd be expecting a bounce from here. So if we lose a GP, game plan personally would be I'd be exiting my bull place, looking at 0.38 doesn't line up with anything noticeable. So I'd be looking at making a first bull entry at about 0.5, then going in heavy at the GP slash wedge backtest confluence area right here. Let's make a note of that. Let's just go somewhere here. Okay. All right. Let's look at NAS. Was it weaker or stronger today? NAS a little bit weaker. We can see that it's already coming up to the GP. So if you're playing the big board blue chips techs, big board blue chip techs, you should have a little bit more concern. And personally, I've already exited most of my big board blue chip tech names, just because of the sector rotation that we are witnessing right now. So NAS is weaker. I gotta clean this chart up a little bit. Sorry, I only prepped the SPX chart. Next up, Dows. Bounce from the wedge. We were in the channel before and lost the channel. Now, as during the day today, there were a couple of things I was looking at. This channel, we lost it overnight. But during the day today, was it today or yesterday? Okay, yesterday. Yeah, okay, never mind, guys. So Dow we did not close at the low of day, which is good. Increasing bear volume at the end of day. Let's do the same. Where are we looking at if consolidation were to start? Right, so the previous high is higher than the 0.5. GP lines up with the previous resistance area. So if consolidation were to start, first sign I'd be looking for is this. Roughly about this zone, just under the 0.38. Then from there, the next one I'd be looking at would be just a support or resistance. This one's not a clear support resistance. Yeah, so first sign would be here. Then we'll go deeper into where we'll be looking at for support resistance if this area was to be lost. So play it one day at a time, guys. Remember, be conservative. There's no point being a hero right now. We have been in the bull trend for 53 trading days, which is 2.5 months already. And I wanted to also view that the IWM, the Russell 2000. We can clearly see a difference. And let's do a quick comparison for you guys here. Actually, let's compare it to the weakest of the indexes, NAS 100. All right, we can clearly see a difference in strength. Now, the way the comparison works is that first ticker on your screen, they both start at 0%. You can see that on the side here, this have changed to percentage instead. So from here, we can see that the movement is roughly the same. Whenever the market goes up, they both go up. However, we do see a clear difference in percentage return wise. Russell 2000 is clearly seeing a more bull momentum than NAS. NAS over the period of from end of September till now has only seen a 16.93% return, versus Russell have seen a 44%. Okay. So this is what I mean by clear sector rotation, guys. Know the names that you're playing, know the tickers that you're playing, what indexes are they under. That'll make a huge difference on your trading. As the market pulls back, we should see less of a pullback if your ticker is under Russell 2000 versus if your ticker was under NAS or even SPX. We can see that today it is only slightly, ever so slightly red. It's a doji candlestick instead of a bearish engulfing. Were they bearish engulfing? Oh no, it's a bearish continuation. Yeah, so mind the names that you're playing. Make sure that you want to be scouting for the names that are showing a lot more strength, relative strength to the market. And Russell 2000 is likely your best bet. Okay. Another thing I noticed today is the US dollars. We passed that support resistance zone. This is providing a big red flag for the market. When US dollar rises, again guys, when US dollar is a safe haven, considered a safe haven for investors. When US dollars are on the rise, you should be concerned for the market, because the big money is concerned for the market. So today, for the first day since we broke below in over a month, just over a month, we have broken below. So it's okay to be conservative. It's okay for you to remain in cash, because cash is a position. As US dollar goes up, your portfolio will go up even in cash position. And one last thing to look at, a couple others. Bitcoin, noticing a wedge here. So it's forming on the daily, it's forming a potentially bull flag. Right now it's a bull wedge. So we'll see if there's further downside. It might instead form something like this. So it might instead form a bull flag. On the weekly, ABNB is still far away. So even if it were to come down, it is still a weekly bull flag. No major concerns if you're in the trade. Just watch for that weekly 8 if you're a long play for it. On the daily, likely, if I was in the trade on the daily, based on the daily chart, I would have exited already on the loss of a daily 8. Right now, it's just gonna, from my expectation is we're gonna go in the long-term sideways action. And last but not least, volatility, VIX. So this chart's a bit messy because I wanted to show you guys what I was looking at here. If we look at the long term, guys, on the VIX, there's clearly a clear division into two parts. Here's the support area, here's the resistance area. And we can see that the chart's been rejecting off the resistance area, support, and it sort of bounces kind of thing. However, there's also the middle part where it divides the middle parts into two. Once you're below, it sort of stalls here for a long time. Then once you're above, it gets support above here for quite some time as well. Again here. This is a little bit different as 2008. This again was a little bit different as the pandemic, the vid pandemic. And from what I'm noticing is, as of late, we've been staying above on the upper zone. So let's look at the last time we stayed above at the upper zone, what happened. And it was 2008, 2009. Again, guys, we're not here to predict the top or buy the bottom. You can never nail the top or nail the bottom. I mean, every now and then you can. I think in my trading career, I've only done it once. Nailed the bottom on Jameson Wells when it came out. a few days after it came out. Actually, it was a fun play, always memorable, but don't expect it to happen often at all. Okay, what you want to be doing is just making money in the whether if it's on the downside here or on the upside here, somewhere in the middle. You don't need to nail the bottom, don't need to nail the top. So here's what I'm looking at. Last time that we stalled in the on the downtrend and sort of stalled here in the upper part of the zone. What essentially happened was, right now we have two big upper wicks that came to touch the resistance area, and here we have two real bodies that came to touch the resistance area and then got rejected. Following that, we broke down under, but then we had a spike. So given that it is RSP season coming up, and generally that is really bullish, my expectation is we will likely see a slow grind down on VIX. So it's overall, market is giving confusing signs right now, but remain bullish as there is no red flag on the daily. We haven't broken the GP yet for SPX. US dollar is giving a bit of a warning sign. Broke over the resistance area. VIX, nothing too exciting happening. I do have position in VIX, just using it as a hedge. One thing you could also check out is the VIX term structure. So on here is something very interesting. We are projecting a rise in VIX, a rise in volatility coming to September or February and March, continuing into April. So if you want to hedge, right now is a good time to potentially purchase some volatility. Just understand that volatility, as market grinds sideways or upwards, especially even sideways, your volatility prices are going to be decreasing. So it's sort of like a decay over time, even if market goes sideways. But understand that when you're looking at a chart like this, when something happens, back when there's lots of US China trade wars, you can see constant spike kind of thing. So it's not a trade for the short term. I mean, it could work out very well if you get the entry rate, but it's not a trade for the short term. And also, I should have mentioned this at the beginning of the video, as it's a weekend video. These videos I'm gonna try to spend a little bit more time on and doing further deeper dive into the market and the tickers. So hope you guys enjoy. All right, let's get into the hottest tickers. First up, Tesla. What are we looking at for Tesla? It is bullish. Jesus Christ, eh? After a run of 119%, we are still bullish. We are holding the daily 8. There is nothing wrong with the chart. If you're in the trade, keep at it, guys. Kudos to you. I exited way back here. on the day of uplisting, I exited way back here. And then thought about re-entry here on the GP bounce and trend line, but decided, I'm in capital preservation mode, so didn't take it. Having a little bit of regret, not gonna lie, but hey, it's a name of game, right? Account still made all-time high, so even without Tesla, it would have been a lot higher with Tesla, but happy where I'm at. So if you're in the trade, remain bullish. Nothing wrong with the chart. We are staying above daily 8. If you are in the trade, use the daily 8 as your guide right now, and we are potentially looking at breaking down below it if the market is going bear. Right now, if you want to be conservative, use the weekly 8 as your guide, which is way back down here at $700. So we need that weekly 8 to catch up. And on the daily, what I'm looking at here now is for a bull flag to form. It's forming a bull flag right now, but most ideal bull flags, you want to hold that specific time frame's ABNB, and we're just about to lose it. It is still going to be considered a bull flag considering the weekly chart. Very bull flag. Okay, and there is nothing notable on volume wise or RSI. So if you're in the trade, know where your stop is going to be. Right now, with the way that we are standing up here, as long as we hold at 88, no reason for exits. If we lose at 88, consider taking some profits. There is a gap down here below, which lines up with the 0.5 fib around the 745 area. So if we lose at 88, I'd be looking down first at the 0.382, 781, then the gap fill of 740. Next, snow. It's becoming a little bit frustrating trade on this ticker. Saw a potential shoulder forming here, then we got shot back down today. Still in the trade. Took a little bit of profits yesterday, thankfully. Let's see. Where are we? What does the chart look like right now? I believe we broke the GP. Oh yeah, we way broke the GP. So this GP must hold. That low right here. The low right here of 286.5 must hold. If we lose this, we'll likely exit the trade. Because if we lose this, we just got shot right back down below the trend line again. We'll be keeping it on top watch, even if I exit. But if we lose that GP, we'll likely go into a long-term consolidation. And let's keep the support area on watch. Next, ABNB, Airbnb. Now, for those of you that haven't traded this ticker, personally, I'm beginning to really fall in love with this ticker. Just because of the way the price action moves. It takes time, but it really pays. So from here we can see on the daily there's a potential head and shoulder forming. That, let's see, if we were to, no, sorry, this is already trend changed. So trend's already changed to the bears. This is the head and shoulders, and we broke bear already. Soft follow through. Now we're getting shot down from the hourly 8. So same idea but reverse. If you are in the bear play, use the hourly 8 as your guide. This chart moves, the price action moves really fast and furious. So I do see there being a potential of coming back down to touch the wedge. But people are bullish on Airbnb. And actually, if we look at this, look where we bounced from. We bounced from the 0.5, guys. Right at the 0.5. That's actually a really beautiful bounce. Chart's strong. What does it look like on the daily? Not even touched the daily 8 yet. So if we go sideways, even if we go sideways from here, sort of inside bar or even a little bit more bearish, the chart is still bullish overall. We'll be having this ticker on top watch, looking at re-entry. Just want to see what the market does first. I want to see that reversal on the market before I take any bull position or any further bull positions. But I do like where this is bouncing from. Right, next, space. Not too exciting of a chart today. Gapped up, ran, rejected from previous resistance, which we know that what's going to happen next day, especially on this kind of volume. A spike of volume, you will see follow through, but it's going to take time. So with this kind of candlestick yesterday, the game plan should have been exit before end of day, especially with this rejection. If you are still in the trade, I would still exit just because of this gap that we're looking at from here. That gap alone is 8.4%. And we slightly lost the support down here. Once we actually close under it on the shorter time frames, you will be looking down at 27.85 for the gap fill. And for those of you who haven't played this ticker before, this ticker likes to give back profits fast. So make sure you take your profits while you can. I traded this. It's an amazing ticker for day traders. An amazing ticker for day traders. Volatility, once it comes up, the price movements, once the volume shows up, the price movements are amazing. Look at this. Just from this run alone, 46%. From the last run alone, 110%. Then it gives back 36%. If you're playing options on this, there are so much money to be made. Just gotta catch that right move, and if you look at it, there is no lack of right move. Now this run was actually the craziest run, which is back when I first started trading. So I missed this one personally. I hope some of you caught it. 480%, over 480%. Can't even see the number. Then it just gives most of it back, minus 78%. Look at the volatility on this chart, guys. Amazing money to be made. But yeah, leaning bearish on this chart. Daily 8, we are far extended from the daily 8, especially yesterday. Then today we closed down below, did not lose the low of yesterday. Well, did not close down below the low of yesterday. We did lose the low. However, in comparison, low bear volume comparing to yesterday. It is still notable bear volume though. Overall, I'd be looking at minimum gap fill 27.85. Last but not least, Zoom. Alright, so on Zoom, we broke bull from the gap fill pre-market on January 12th. Then from there we saw follow through, but a big doji, basically spinning top. Then further follow through, which is amazing. It's given very decent profits so far. I'm personally out of the trade now just because of the market. This one, I'm looking at further upside. For me right now though, because we closed under the GP, if tomorrow doesn't give us bull sign to close above, within or above the GP, I'm not interested in the trade until a potential wedge backtest. That would make it a little bit more bearish than ideal. Most ideal case I want to see, it would be probably a bounce from the 0.5 area, then just go. So expectation, let's draw it out, something like that. And expectation, sorry guys, I forgot to draw the expectations today. Expectation for space would be at the minimum, gap fill, imagine over the next 2 days. And reminder guys, US market is closed on Monday, so I'm thinking something like that. And ABNB, this one's harder. This one we gotta see what Tuesday brings. I want to be bullish on it, but it's a little bit more market dependent, so I won't draw anything on this one. Snow, same idea, a little bit following the market right now. We gotta hold this bottom zone. Tesla, sideways action already drawn. Right, so that's it for part 1 of this weekend's video, market and hottest stickers. I hope you guys enjoyed the video. If you like the contents I am putting out, make sure to hit that like and subscribe button. I try my best to come out with 80 videos and improve as we go along. As you can tell by the new mic, and make sure to check out the website. Again, soft launch on the website, totalcontroltraders.com. Thanks for watching guys. Have a great weekend.